everyone, welcome to this video. I am Ronica Brown, tax advisor and CPA, and I have my friend Brad here. Brad is a fractional CFO, and he's also working on a lot of retention credit for clients from last year and also for 2021. And a lot has changed really. Employee retention tax credit. First, when this came out, if you took a PPP, you would not be able to claim the retention credit. So since then, this credit has went on. There's several changes, right, Brad? There's been several changes, and what happens is a lot more business owners can qualify. So the conversation that we're gonna have today is basically looking at some of the metrics that will help business owners to qualify. And I know that you may have heard that, you may not have qualified because you're in a certain industry or you've made a certain amount of money that you will not qualify. But this credit, there's a lot of nuances, and the worst part about is it's basically working through the qualification. And this is where Brad comes in, because he has helped a lot of my clients and his clients as well to basically qualify for this credit, and they're able to basically maximize the credit for themselves and for the employees, for everyone that's on payroll for their company. Welcome, Brad.
Thanks, Veronica. Really pretty happy to be here. So thanks for making the time to have this conversation.
Awesome. So I know that you've been busy doing, you and your team doing a lot of retention credit. So let me know what's going on so far as it relates to 2021 and the retention credit. What does it look like in terms of people getting qualified for it?
Yeah, so you're right. So we've been super busy doing the employee retention credits, and really focusing on clients that I call them the tough cases, right? The cases that don't immediately look like they would qualify, and working with those clients to maximize their funding. And do it in a way that's defensible and audit proof and legal and ethical, because those are really important things to be doing here. But yeah, so the credit for 2021, there's multiple different versions of, we all call it the same credit, but there's multiple different versions of it. But basically, kind of the high level way to think about it is that potentially, if you were to maximize all of the quarters and all of the amounts in each quarter, you could potentially get up to $28,000 per employee over the entire year. So it's a lot of money.
And I just also want to remind everyone that a credit is actually a dollar for dollar. This is not a deduction. So that means if your credit is $28,000, that means $28,000 in cash. Is that correct?
Yeah, in cash. Yeah, the IRS will send you a check. They'll write you a check, and you'll get it'll show up in the mail. So it's pretty amazing to think about. Right.
So I know a lot of you may ask, Ronica is a CPA too. So, my CPA may be taking care of this or something like that. But if you can tell, your CPA may be a lot busy with tax returns, financial work and all of these things. So what happened this year is that with COVID and all the law changes, a lot of CPAs weren't able to completely implement some of these stuff for their clients. So if you get an answer to say, oh no, you just qualified because of this, and there wasn't a deep analysis, so that's where you have to go to someone that basically specialized. That's all that they're doing right now, is basically looking at the research, dissecting the code, and helping you to qualify, because CPAs are extremely busy with tax return and basically helping to unwind some of the other issues that we had during the pandemic. Because Brad has worked with a lot of my clients, and you've been working with a lot of other CPAs as well, right, Brad?
Yeah, and that's a really good point, Ronica. So we have a lot of CPAs who are now actively referring this work over to us, and it's for the reasons you just said. One, this is a payroll-based tax credit; it's not an income tax-based tax credit. So, as you know, Ronica, a lot of CPAs are just they're focused on compliance. Put the right number in the right box at the right time, and help clients not make silly mistakes. And that's an important role to have.
Yes.
And I think, to your point, all the changes on the tax code over the past year, It's just been a full-time job just keeping up with the income tax side of things. And then you add on to all the government stimulus programs and all the different ways they interact. And in most CPAs that I work with, they're really good at tax and they're really good at compliance, but they're not as familiar with payroll. They're not as familiar with kind of how the payroll tax flows through and how it's assessed to different employees. Um, and really kind of where we've seen a lot of clients get frustrated is they'll go to the CPA and say, "Hey, tell me about this employer retention tax credit," and the CPA goes, "Let me look into that. I'll get back to you," which is kind of like your doctor saying, like,
Yeah.
it's like not what you want to hear from your CPA. And they come back to the client and they say, "Well, it looks like a lot of money. There's a lot of moving parts to this, and it's payroll based. So you got to talk to your payroll company." And then so the client goes, "Okay." So they talk to the payroll company, and the payroll company goes, yeah, we could help you like submit the form, but we can't help you with the calculations. You have to talk to your CPA about how to do the calculations, and you have to talk to CPA to determine if you even qualify." And so they go back to their CPA, and they're stuck in this ping pong, right? And they kind of throw their hands up. And so that's why I think a lot of CPAs have realized, like, hey, like, we need somebody who could specialize in this and could answer the tough questions and kind of do the deep analysis, and work and could work with the payroll companies, right? And to make sure all the numbers get done. So that's why it's been really fun working with a lot of different CPAs and really developing partnerships in that regard, just kind of like us.
What I've also seen, I guess, in my CPA communities is the revenue part, that a lot of clients are getting turned down by their CPA just because of some revenue or something like that without any. So, you'll see, all of those posts, "Oh, I did not qualify because, the revenue is this," or "My industry was, they're in an industry that was like non or essential service or something like that." Can you speak about that part, that, those people, even though they made a little more money, that the two metrics for them to qualify was the revenue reduction and also the partial shutdown and the gross receipt test? Can you talk a little about that? Because I think that's one of the parts that's like spooking CPAs, that we go to these webinars and we see this, but we haven't had the time to dive deeply into see, okay, what are those subsections and subtexts that we can look at to see how we can help our clients qualify.
Yeah, that's a really good point. And so there's three main qualifiers, and there's a lot of confusion around the qualifiers. And so the three main qualifiers are a revenue reduction, a partial shutdown, or a shutdown of your supply chain. And so without kind of going too deep into the weeds, because I could, trust me, I could talk about this for days.
Yeah, don't start being an accountant now.
But so for example, I think a good way to describe this is a company that would qualify. So think about a restaurant, and think about specifically a pizza shop. And the pizza shop during COVID actually did really well, right? Because they were set to do deliveries and food to go, and so they made a bunch of money, and their sales were way up. Well, that pizza shop still qualifies, and the reason they qualify is because of what we call this partial shutdown. And the partial shutdown is the IRS says basically, if the government came to you and made you follow a bunch of rules and regulations and forced you to change the way you do business, forced you to change how you provide service to your customers, forced you to make modifications inside your business, and we could document that had an impact on your business, then you qualify for these credits over the time period that those government mandates were in force. And so that's where I see a lot of CPAs making the mistake. They go, "Oh, you're essential. Nope, you don't qualify. Oh, your sales are up. Oh, you don't qualify." And when you read through, it's over 100 pages of IRS guidance on this. And I'm kind of weird. I kind of like reading IRS guidance. It's kind of fun, but I'm different than the average person. But there's a line in there that very specifically, the IRS says, even if all of your operations were allowed to continue, but you were subject to modifications, you potentially qualify.
Wonderful. And then with the credit being expanded to 2021, are you seeing people that they may not qualify in 2020, but they can qualify in 2021?
Yeah, so we've seen where clients who because of the type of business they had didn't qualify in 2020, but then they had a revenue reduction later on in 2021. We've been able to capture those. We've been able to go back in time, and clients received advice from their advisors that said they didn't qualify, and we took a deep dive and said, nope, you actually do qualify in these time periods. So um, it's really exciting. I mean, it's really fun work because I mean, our mission in my company is like we want to help. Like we've been doing this literally since before like emergency aid was even a thing. I think Ron, about like the White House working group I was part of. It was just like this was like before the CARES Act. This was before the PPP. So like we've been like focused on this stuff like for a long time. So it's really cool when somebody comes to you and they're like, I'm frustrated, I'm overwhelmed, I don't know what to do, and we can say, hey, stop. Let's take a minute. Let's go through this systematically. Let's look at all the facts, all the circumstances, put the process together, and you start seeing that money flow through. It's a pretty cool thing to do.
Exactly. And, to me, if I don't have the full information for a client to qualify for something, I'm going to say, I have a guide. I have Brad that can help with retention credit. Unfortunately, we don't have the capacity to work on retention credits right now, but I have someone that can help you to work on the retention credit. And I think that a lot of CPAs, should also take that approach, just because I know that we think that our clients, want us to just do everything, but our clients want us to help them save money. And if it's through them working with Brad on their retention credit and they're getting back $28,000 in cash, 40 something, 100K in cash, then that's also value added to their clients. So how can people get in contact with you, Brad?
So the easiest way is you can email me. Go to my website. My website's mewescfo.com. Probably the easiest way though, I have this really easy to remember link. It's called zoombrad.com. So Zoom, like what we're on right now, Zoom, brad.com, and that takes straight to my booking page. And I'm a pretty social guy. I'll talk to anybody. In fact, my team's like, Brad, you got to stop. But I just put my calendar out there, and in 15, 20 minutes, we'll know whether or not, yeah, it seems like there's something there, or sometimes I let people know, like what, it doesn't matter how you cut it, how you look at it, like there's nothing there. But right. I'd rather have that 15-minute phone call and where there's some certainty than kind of wondering, well, what if.
Right. So it sounds like, them getting a good analysis, not just, okay, your business wasn't shut down, or you made more money. It sounds like, everyone at least need a deeper explanation before they can completely write off this money, because this is money that most of this credit is refundable. So the government will actually send you a check, direct deposit, whatever method, that you're going to get this money back into your business.
Yeah, you get a check in the mail. And so it's definitely it's worth especially if you've been told no, you don't qualify. In my opinion, it's worth a second opinion. Always is.
Right. Thank you so much. I know that there's a lot of changes, and this is one that I definitely had to get some more information out there, since I've seen so many people being turned down that they didn't qualify without a bigger explanation. So hopefully this is helpful, and thank you so much, Brad. I will also drop your link below as well.
Perfect. Thanks, Veronica.
Awesome.